Well, we've seen fresh all-time highs in US markets, but are they going to continue, or will the rally come to an end very shortly? Hi there everyone, welcome to the Traders Circle weekly market update. Today is Tuesday the 23rd of January 2024, and before I get started, you do need to be aware that whatever I say is general advice only, so it doesn't consider your personal financial circumstances, and you have to decide if what I'm saying is appropriate for you. So the major event over the coming few weeks will be the Fed and interest rates, as it has been for the last few years, to be honest. So the Fed's going to meet on Tuesday and Wednesday next week, and although they're unlikely to change interest rates at this meeting, they will signal to markets the likelihood of rate cuts moving forwards. So US markets have rallied extremely strongly on the belief that there's going to be up to 6 or 7 rate cuts this year, that those rate cuts are going to come as early as March, that interest rates are peaking, bond yields are going to keep falling, and we're going to return to a low interest rate scenario like we saw, perhaps during the COVID period or even just before the COVID period. That's been a massive positive driver of shares for the past couple of months, that whole narrative. However, that hasn't really been justified by the economic data, the news and events that we've seen around the world. We've basically seen US inflation come in stronger than expected, still well above target ranges. We've seen other US economic data continue to come in very, very strong, continue to look very inflationary, and this whole sort of narrative about the economy slowing down and interest rate cuts being necessary is yet to really materialize in the data. And so I think markets have gotten ahead of themselves in forecasting these rate cuts, and I think they're just starting to wake up to this fact. So here we have the FedWatch tool for the interest rate probabilities in March, and as of a week ago, basically 3/4, there was a 75% chance of a rate cut in March, according to the market. Now that has actually dropped to about a 46% chance, or a less than 50% chance at the time of recording. And I suspect that's going to continue to drop even further, especially after that Fed meeting next week. Now, given this has been such a positive driver for markets, we would start to expect the reverse, where as those rate cuts get pushed out, as the number of rate cuts in 2024 starts to be reduced, I do think that there will start to be some selling creep into the markets. Valuations are extremely high at the moment. They can only really be justified by very low forward rates, and those forward rate expectations are going to have to be lifted. Now, it's a similar scenario for our RBA. Our RBA is going to meet in the first week of February, the week after the Federal Reserve, and I suspect they're also going to pour cold water on this rate cut narrative. So I do think there's some risk for the markets coming up in the coming week. Like I said, Tuesday, Wednesday next week for the US market, and then for our market the week after that. For our own market, we're not forecasting rate cuts anytime soon, but again, I think we're likely to push our expectations out further in the year, and I don't think that's going to be great for share prices. So the RBA, like I said, that's going to come the week after the Fed. That's going to be on the second week of February, the first Tuesday of the month. And I suspect they're also going to talk about the need for higher for longer interest rates. And I suspect that, again, it's not going to be great for our market. Finally, I did want to touch on iron ore as well. One of the reasons why our markets perhaps underperformed the US market so far in January, so the US markets have been grinding into all-time highs. Our market did have a bit of a pullback. That's because of iron ore. Now, iron ore for the month of January has been pulling back. It basically got to about 1,000 yuan per ton. It drifted back off to about 930, I think, yuan per ton, and it is starting to push back up on the futures market. So that's what we've seen across the past sort of week or so. Now, with our iron ore stocks pulling back, our markets pull back, and we've underperformed the US market. However, if iron ore is to bounce from here and continue higher, that could be the driving force we need for our market to push back to its own all-time high. So there's a little bit of a bullish silver lining for Australian shares, is if this iron ore price keeps pushing higher. Now this chart might look a little odd because it's a Chinese chart, and in the Chinese markets, red bars mean gains and green bars mean falls. So in January we've seen plenty of green bars, plenty of selling in iron ore, and across the past week we've seen iron ore start to tick back up a little bit, and that's those red bars there on the right hand side. Alright, so let's have a look at the charts, and this is the chart of the Australian XJO Index, top 200 shares in Australia, and we can see that for most of January it has seen some selling, and like I said, this does coincide with the pullback in iron ore, and in fact if we are to look at the large cap iron ore stocks, we'd see an even steeper amount of selling than this. So we topped out just below our all-time high. In fact, we were 0.1 of a point off the all-time high right on the second day of the year there. We pulled right back to this longer-term uptrend line. We bounced from that level, roughly 73.20, and we've pushed back up from there. We've pushed back up over the last 3 sessions. That does coincide with the grind into all-time highs in US markets, and now we're going to have to wait and see if we top out above or below the previous all-time high. If we top out below that all-time high, that's a bearish sign. It's going to be a lower peak for our market, and we would expect further selling. If we go through it, that's the case of breaking above roughly 76.20 there. That'll indicate further upwards movement. Excuse me. Like I said, I do think there's a risk we see a pullback in US markets because I do think they're way more dovish than the Federal Reserve will be next week. And if the Federal Reserve does pour cold water on the rate cut narrative, I suspect that US markets will see a pullback. If that's the case, I think it'll be very hard for us to go to all-time highs. So this is the US S&P 500 index, their largest and most broad-based index. And on Friday last week, it did break into its own all-time highs. This is the highest level it's ever traded at. And it did continue higher overnight in Monday's session, but it wasn't able to maintain the gains. In fact, it actually closed right around its opening level, and it reversed the intraday gains, basically. We would call this a doji, some might call it a tombstone doji, but what happens is if you do get a push up here and then a pullback, it could be a bearish reversal signal, what we'd call an evening star up the top of the chart. That'll only be confirmed if we do see selling in tonight's session, and like I said, momentum does look to be to the upside for now, but I do think there's fundamental risk on Tuesday and Wednesday next week with the Federal Reserve meeting because I suspect that markets have dramatically overestimated the Fed's willingness to cut rates here. Unfortunately, until then, we're going to have to wait and see how things pan out. We don't really have a clear idea until then. We're waiting for that bit of fundamental news. I think markets will probably be subdued until then. You wouldn't want to make a big move right ahead of that event. And so we're just going to have to see what they say and whether they are hawkish or dovish at that meeting. So we'll wrap it up here for today, guys. Hopefully you enjoyed. If you did, please let us know. Please click the like button. Click subscribe if you haven't already, and we'll see you in the next one.